Hi, and welcome to our fifth episode of 2023. Today, we are very excited to speak to the analysts of one of our top partner brokers, HFM. Stuart and Andria have both been at HFM for a number of years, and they have a lot of experience in running webinars and various educational seminars. So we hope you enjoyed the episode as much as we did. As always, like and share. Thanks. Hey Chris, how's it going today?
Hey Alison, no, I'm pretty good, thanks. How are you?
Yeah, I'm good. I'm excited for our podcast today. So today we are going to be talking about one of our partners, HFM, and we really like HFM for a number of reasons. They've obviously got great low cost accounts denominated in rands, which is great for South African traders. They've got a great copy trading account. We really enjoy their mobile app. It's easy to use, and it has all the features that you need for trading. And they also have excellent education and market analysis. And
They do, yeah.
with that, we are very fortunate to be talking to two of HFM's top analysts, Stuart Cowell and Andria Pichidi. So welcome. Thanks for joining us.
Welcome, guys. Thank you very much. It's good to be with you today.
Yeah, thanks.
It's a pleasure. It's a pleasure to hear you guys, Alison and Chris. Thank you for hosting us. And a great pronunciation from Alison in regards to my surname, by the way. That's great.
I had to practice that a few times in my head.
Thanks for coming on, guys. Do you want to just tell us a little bit about yourselves and what you do at HFM?
Ladies first.
Okay, I have joined back in 2016, wasn't it? Yeah, back in 2016. So I'm a market analyst here in the company. After gaining my bachelor degree in mathematics and physics and a postgraduate diploma as well in actuarial. So I was experimenting a bit with this industry, and then I find it really fancy and it keeps me on my toes actually on a daily basis, and that's what I love the most. So yeah, I joined 7 years ago. So, and actually, we as our motto is, we're here trying to help as much as we can our clients with all the necessary info, all the necessary tools to actually help them develop as in the future as great traders themselves and to be able to stand on their toes as well. So that's it from me.
Nice.
Hi, everyone. I'm a bit longer in the tooth than Andrew, as you can probably tell. My background is in the City of London. I actually graduated in economics and geography. Geography is my first passion. But I first was fascinated by the City of London in the early 80s. I'm that old. When I first saw the NatWest Tower in the city, and I thought, oh, wow, what a place. It was all glass and steel, and the big bang was just happening where the American banks were moving into the city in sort of the mid 80s. And I've worked for retail banks. I've worked for investment banks. I've run my own management consultancy. And I relocated the family to Cyprus at the beginning of the 2000s and haven't really looked back since. It's been a great place to bring the family up. They're both back in London now. And my wife and I are still here with dogs living by the sea. I was born by the sea in the northeast of England, and we live by the sea again now. So yeah,
bit of a warmer sea down in Cyprus, though.
Absolutely, yes. There's no waves though in the Mediterranean, but never mind.
And how long have you been at HFM, Stuart?
I joined HFM just before Andrew in 2015. And we've got a team of analysts all around the world. So we've got guys in Africa, Indonesia, Malaysia, Mexico for our Spanish speakers. So yeah, good team.
Yeah, it's something that we really like about HFM is you see a lot of brokers, actually surprisingly amount of brokers who don't really invest in their education and market analysis. But it's something that's always really impressed us about HFM and that you do it on a global scale. Is that a new thing, or was that the way since you started? I mean, is this something that you guys have built over the last few years?
Thank you for that. I see it, and I think that's the whole philosophy of the company. It's fundamental to what we do. some people say, good traders are not necessarily good analysts, and good analysts don't make good traders either. But people fall into it thinking, I need to have the latest indicators, I need to have the latest charts and the latest news. And it's really, we'll talk about this later, I think, but really for me, it's always been about understanding yourself as a psychological business, successful trading and successful investment. You've got to understand yourself first and foremost. And that's one of my big mantras I bang on about all the time.
Yeah, we will talk about that, I think, in some depth later. But it's kind of the reason why we had you on, though, because HFM are so impressive when it comes to market analysis. Before we get into things, I just wanted to run over basically the recent events. I mean, we've got 2022. Just looking over the last year was a pretty crazy year for the markets, as it has been the last few years. I think since the COVID pandemic hit, really, we've seen some wild gyrations across the markets. What were the most important market events for you guys in 2022?
Well, for me, really, it was obviously the strength of the dollar that dominated everything, and everything ripples out. Love them or hate them, everything ripples out from the American markets and the American dollar still. There's obviously lots of chatter that the dollar's losing its dominance. It's not the buying power it used to have, and that's certainly the case. But it was the dominance of the dollar, and that then rippled out on everything else. Obviously, the commodity markets were hit by the tragic war in Ukraine and implications that's had for other commodity markets. But really, if you had to sum up 2022, it would be the dominance of the dollar and the collapse and the end of the bull market since the financial crash of 2008, 2009, really, in a nutshell. But looking positively forward to 2023, when markets crash as much as they did, like the Nasdaq lost over 30%, I think it was, wasn't it? They tend to recover, not necessarily well, but they'll tend to recover. Markets, in my experience, Chris, have always overreact. They go down too far, they go up too high. It's just human nature. Again, it's what I mentioned earlier about psychology, and it's that fear and greed that drives markets always, and always has and always will, in my humble opinion.
Yeah, and it's interesting. We just published something that's written by your analysis team on our site, actually, about the USD index, and it was quite interesting timing because it was written last week before the latest NFP came out, and now we've seen some extraordinary changes in the last few days off the back of that NFP result, and so it just goes to show how fast things can move. And would you see the continuing strength of the dollar happening in 2023? I mean, do we see this continuing, or do you see a sea change on the horizon?
So you're absolutely right. That actually was a really focal event. I mean, the NFP and actually the labor market in general the labor market, especially in the US, is on hit. So what in regards to the dollar, we're expecting a lot of fluctuations throughout the year. And what I mean by fluctuation, I mean to behave in a different way every quarter. So what I could say for the time being is that it could at least for the near term to appreciate a bit, because we still have, due to the NFP, that number that nobody was really expecting, that kind of number. We still see the markets actually trading and pricing in this tightness, the continuation of the tightness of the Fed, even though we show that we know. I mean, they obviously they said it out loud that we're going to stop, we're going to pause once we see that this has an effect, but it's still difficult to be aware when during the year when the dollar will actually stabilize, or whether it will continue drifting or jumping back where it was back in July and August. So it's still data dependent. Unfortunately, we need to go along with what the labor market and the NFP number is giving us week after week, I will say, because the jobless claims seems that they actually giving a lot of signs in regards to the labor market in the US, and it's difficult to see how the wages pressures can possibly soften sufficiently, when we have such a strong growth in the jobs. So it's even more difficult to see the Fed stop raising rates anytime soon.
I agree.
So that's it looks like the U.S. economy is doing fine, and that's the bizarre. I mean, that is what's causing all this weird behavior from the market participants.
No, exactly. And there's a lot of, I mean, I was looking at some other data. There's underlying weakness. There's a lot of signs of underlying weakness in consumer behavior in the United States. I think credit card debt is the highest it's been for 10 or 15 years. And so there's a lot of some kind of mixed messaging. As you say, like right now, the economy seems to be doing okay, but it's a week by week process. So you do see that the dollar at some point probably will soften this year, but it's just a matter of, it's unpredictable.
It's not so unpredictable. It's just to see more comments from the Fed. I mean, to the odds on that they are nearly to the end. They are nearly to the end, but whether it's a matter of March or April, that's the key. So it's pretty much the very first 6 months of the year. After they can. Okay, I'm not sure whether I can say that for sure, but it's unlikely to cut any rates within the year for sure for 2023, but it's unlikely also to keep rising in the second half of the year. So we are expecting to pause the tightening like within the first half of the year.
Mm-hmm. Yeah, no, that's good. Thank you for the analysis there, Andrea. Alison, I mean, we wanted to talk more broadly about HFM, and a lot of the listeners to this podcast are beginners. A lot of the stuff we do is for new traders, and we wanted to talk quite specifically about what HFM does for beginners.
Yeah, I mean, we see that you guys have, as we spoke about before, a range of education for traders of different experience levels, which is also nice to see because a lot of brokers sort of just focus on beginners and it leaves intermediate and experienced traders with sort of nowhere to go. What are the most common questions you get from your beginner traders? What do you find them looking for in terms of support?
How do I make money? Is that very simplistic, understandable way of what people ask? So that's honestly the first thing. And then after they've tried for a little while trading this volatile market, whether it's stocks or forex, doesn't really matter what the asset is. They then come back and say, "Well, I've lost money. I don't know why I've lost money, or I've made money. I don't know why I've made money." Mostly they've lost money. And as I said at the beginning, it's really to do with they're impatient, they're indisciplined, like we all are as human beings. So, yeah, basically it's that very simple, how do I make money? And my answer is always the same, has always been the same once the penny dropped for me. And it's having an approach that works for you. We're all individuals. You can make money and lose money very quickly in the market, but you have to have a thing that works for you. So you trade something that fits your time scale, your lifestyle, whether it's trading, scalping on a few pips, or you're an end of day trader and you just look at the charts once a day, or even the end of the week. So you fit something to your personality. Don't try and change your personality to fit the market. That's always fatal. And how do I get started? So the beauty of things like the MT4 and the MT5 platform is they're very robust, they're very easy to use, they're very intuitive. We've just recently upgraded and launched our new app as well, proprietary HFM app. That's really, we're really excited about that. That works very intuitively as well. And so they're the basic questions, as anybody, trying to risk money. It's how do I make money? It's the most common question we get from beginners.
Yeah.
We've been talking on this podcast about building a trading strategy and how important that is for beginners, including risk management. I mean, are there strategies that you recommend for beginners when they get started?
Well, again, we can't recommend anything in that sense because of the regulation that surrounds
Of course.
it. But really, if you get your head correct, and it's very, very difficult, you find a strategy that works for you and works for your time frame. Markets, as I say in the seminars, markets only do three things: they go up, they go down, they go sideways. So when a market's going sideways and you're using like trend following strategies, you're doomed to failure, unfortunately. And likewise, when you're trying to catch the top of a market and there's a big, strong trend in place, you're somewhat doomed to failure as well. So finding out what the market is doing now And does it fit your personality? Can you sit on a trade for days, possibly weeks, as it's going in one direction and there's a little bit of a pullback and then it keeps going, or it's going down and you're short, so that's good, you're making money? Or do you get too close to it and sort of cut your winnings very quickly, but let your losses build up? And that's one of the biggest things from a strategy point of view. Well, you touched on intermediate traders at the beginning, right? We spend a lot of time with people that have tried and failed and then don't know what's gone wrong. They don't know why they won. They don't know why they lost. Mostly they end up losing money. And so it's having a system that works for you. But most people, unfortunately, their losses get too big and they cut their profits too quickly. Same old, always has been and probably always will be.
Our last episode was actually on trading psychology, wasn't it, Alison?
Yeah.
It was on. We're going to do a follow-up next week. And it's interesting that you bring this up, and it's one of the things that we talked about is that average losses are so much larger than average gains.
Absolutely. Always have been, always will be.
Yeah.
It's human psychology. When you're holding a losing trade, say you've taken it on the 15-minute time frame, you'll suddenly say, "Oh well, I'll leave that. I'll look at it on the 4-hour time frame. It doesn't look so bad." It's having the discipline and to accept that you're losing, and that's one of the big things I say again as well, is accept losing, accept losing, accept losing. First 3 rules of trading. If you can't do that, go away, go and do something else, because you'll never get off first base, as the Americans say in baseball.
Yeah.
Yeah.
I mean, are there any tools that you would recommend then that beginners use?
There's a whole host of tools, but the strategies and tools won't work unless you've got the first step bit right, the soft skills right. So there's some great tools on our website. I mean, Auto Chartist. I mean, there's free advertising here, but I love that. I love that package. It's a scanner. It looks for patterns. It works on all assets. It works on all time frames. There's loads and loads of data in there saying how well it does on different time frames for different assets. So you can tailor it very much to your approach, your personality, your trading style. But again, most people don't spend the time investing in their own education to get the best out of a tool like Auto Chartist. We've got our professional trader tools package as well, which is a whole host of tools in there. And there's training courses and webinars and videos on our website about how to get the best out of that as well. The problem is what you see time and time again, whether a beginner or an advanced trader, is people for some reason don't seem to spend the time investing in their own education and their own resources. They just want to get in, see the charts moving around and press buy or press sell, and hang on to it when it's losing and close it very quickly when they're suddenly making a few cents or a few dollars, unfortunately. And that is the big rub. So strategies and tools are great, but you've got to understand yourself first.
Mm-hmm. One of the most popular forms of trading we see amongst visitors to our sites is copy trading. A lot of beginners get involved in this. And it kind of tallies with what you were saying about this, wanting to jump straight in. Because, of course, with copy trading, if you find someone that you think has got a decent strategy, you have to put almost zero effort in. You don't have to understand the markets. You have to jump right in. You can jump right in and follow another trader. And I know it's increasingly popular. Do you guys have any particular thoughts on copy trading and whether it's something that beginners should consider?
Yes, definitely. Even though it should be in line and with in coordination with a lot of learning, because from the one side, it's good for inexperienced traders, because obviously for following someone, you need to pick a strategist that is successful. So it's good because you're following someone experienced, but you need to do it at the same time as you're trying to understand and learn in general the financial markets, the basics, some trading techniques. The good thing for a beginner using the copy trading is that obviously is saving a lot of time. They can open trading positions without having to do a lot of research and etc. But another thing is that they learn from others' mistakes, right? And they improve their potential profit margin as well. So mirroring what the top rate traders are doing can be very useful for the beginners. So by seeing their path in general. So yes, I will actually replying to your question is yes, copy traders is good for inexperienced traders because there is a lot of learning if you think about it. If they do it right and if they keep tracking what their strategist is doing, if they try to come in contact with skilled traders, there is a lot of information that they can share. Okay, so this is on their benefit, I will say.
I think as long as you're sort of doing your own research as well, then you can probably maximally benefit from copying other traders.
Because eventually you will reach to a level that you will be a strategist on your own. I mean, without actually copying others.
Yeah.
So on that, you guys obviously offer MT4, MT5, and then you have the HFM app that you've got available. And for beginners, which platform would you recommend they start with?
I'll say for beginners, I will say that just to jump into MT5 first because it has a wider range of figures, more time frames, more analysis tools, I mean indicators, expert advisors, etc. So that will help them to get familiar before they get confident enough and try from the mobile app.
You know, obviously the App Store is not allowing MT4 and MT5 downloads at the moment.
Mm-hmm.
I mean, was that part of the reason why you guys launched your own app?
It was definitely a reason for doing it as fast as we can. I mean, to deliver to our clients and keep our clients happy. But it was always something that we had at the back of our heads because everyone, we all of us, for anything in life, we need easy access from our mobile phones, right? It's like the extension of our hands nowadays. So, and especially now that there's not a lot of free time. So having an easy access from your mobile is a must for anything. Either it's a trading platform or is it like, I don't know, calendar, whatever. It's a must.
Yeah.
So
and it just gives you a bit more sort of peace of mind that you can close a position. You know, as you say, Stuart, if you need to get out. And yeah, I mean, that's absolutely imperative to be able to get out if you do need to.
Yeah,
it certainly is.
Yeah,
That's when
is.
the profit or the loss is made, isn't it? Getting out.
Yeah.
I was quite skeptical because I am, you know, I thought, what's the point? What's MT5 got over MT4? But what I've really liked about it is being able to choose the time frames. Andrea touched on it, but I for some reason, I've got a thing about the 2-minute time frame, and you couldn't do that very easily on it. Or you couldn't do it on MT4, but on MT5 it is. So I you know, in short time frames, I like that 2-minute time frame. And I know some people that use the 8-hour candle and the 6-hour candle, these odd sort of time frames, but it fits their style, it fits their approach. So, you know, why not?
And just on this note, well, I mean, we're also talking about for beginners. I mean, is there any particular asset class that you'd recommend for beginners to look at when they're getting started?
it won't be a particular asset class or a particular asset. It's just to try, at least at the beginning, okay, to try with the least volatile assets. Because choosing, like, for example, I don't know, stocks or ETFs or least volatile currencies such as Euro Swiss or Euro O's, for example, it will help them to finalize their strategies, to finalize the system that they will follow. So avoiding a bit, even though that's not the proper word to say for volatility, but avoiding a bit those spikes that we can see that the volatility is causing to high to risk sensitive asset. Yeah, it's a good start for a beginner thing. But surprisingly, the least volatile currency pair last year and so far this year as well was Aussie dollar, by the way.
That is unusual.
I think a lot of traders like volatility though, because then it gives them opportunities, you know. But yeah, for beginners, that could mean the end of an account very, very quickly.
Very, very quickly indeed. You're absolutely right, Alison. Yeah, people obviously you need volatility if you're going to, certainly if you're trading sort of intraday or on short-term time frames. But again, it's all, can you cope with that as a trader, as a human? And a lot of people can't, unfortunately, but they get drawn into things that move very, very quickly. So something like the pound against the yen has a huge daily range, but it can wipe you out very, very quickly, and it's known as the widow maker for good reason.
Yeah.
I remember when I first started investing in trading, an old guy Peter Hall, he was called, down from sunny Devon. He said, invest in the FTSE 100 stocks. They're the ones with the deepest liquidity. They're the ones with the most people looking at them, most analysts, and tend to have the tightest spreads. And it's the same in the forex market. Stick with the big major pairs and those with the deepest liquidity and the tightest spreads.
Yep. No, and I think that's probably true, especially when you start out. Yeah.
Yeah, but as we saw last year, people get attracted to the mem stocks. The AMCs.
Wasn't that heartbreaking? Watching it happen.
And crash. Yeah. It's crazy.
I think we mentioned this, watch in previous episodes, that particular mad bit of market action. And then the stories after that, the amount of people who lost their shirts, who didn't really know what they were doing. It's really heartbreaking.
That's well, again, it's that. Well, and we talked about it before. It's fear and greed. It's missing out. It's the herd impact. I've got to get in.
Yeah, it is. But Alison, I think we wanted to talk about something particular to South Africa as well.
Well, we've seen that you are offering 100% bonus in South Africa and in many other countries. And we find that bonuses are generally great for beginners. I mean, it's free money to trade with. But what we often find is that when people can't withdraw the bonus or, part of the proceeds from their bonus or whatever it is, because they haven't read the fine print correctly, it causes a bit of upset. So can you give us a bit of an overview of your bonus and how it works?
Yeah, for sure. I'll do my best. So actually, you mentioned withdraw, right? So the good thing with precisely for South Africa, we have the supercharge bonus, 100% supercharge bonus. So the good thing about this bonus scheme is that it can be withdrawn, but with some terms and conditions. I will be honest with that.
Yeah, we get that. We get these kind of questions a lot, and we get a lot of comments on our sites with people angry at brokers saying, "Oh, I took this bonus and now they're not letting me withdraw." And I'm saying, "Well, did you read the fine print on the bonus?" Because it's and they'll say, "Oh, it's a scam," or or I'm gonna call my ombudsman or whatever. And I'm like, no, don't do that. You're not going to get anywhere with that. You just need to read the fine print.
It's something that our team in the office in South Africa especially is trying to explain in detail and even calculate how this process, the supercharge bonus, work. So the people can feel free to visit our office there, to meet our analysts, to meet our sales team and explain everything, even before they try our bonus scheme. Openness is something that we want to represent, that we're open, and that's why people can join anytime.
That's fantastic.
They can feel free to explain them the supercharge bonus before they even try it. So
yeah, we'll put that in the show notes. We'll put a link to your office in South Africa for our South African listeners if they do want to pop in, because you do take walk-ins these days. I understand, in South Africa.
Yeah, actually, we have some African educational classes. So that is something that is also is happening in the office every morning.
10 o'clock local time. Yes, you can book the offline classes with a Fancy. Our analyst in Sandton in Johannesburg should be with us today, but he's got people he's teaching, so the timing has just overrun. Next time,
busy
we'll
man.
have Fancy. Absolutely, very, very busy man. We'll have him here. And his colleagues as well. But yes, I mean, as we said at the top of the show, Chris, Alison, it's very much, education is very much fundamental to people being able to move forward. And your discussion there about bonus scheme, I think Alison called it free money. That's an issue, or that's the problem. People think it's free money. It's not. It's increasing the equity on your account. But a lot of people don't understand what equity means, or what the difference between their balance and their equity. And it's something I've talked about for many, many years. And really, really get the basics right before you start jumping in. But humans are humans, and they like to get on with it. They jump in. They see the charts moving. They want to buy. They want to sell. And there you go. What can I say?
Yeah, and that's something we want to talk about. I know we've touched on it a few times now, Stuart, but the importance of trading psychology, and you've mentioned, understanding yourself and how often it's overlooked. But as you've said, it's fundamental to being a successful trader. I mean, it's probably Sounds like you're saying it's the most important thing.
Without doubt, absolutely without doubt.
Why do you think it's so important to understand yourself and keep your emotions in check? I mean, what's actually happening here when we tell traders to understand the psychology and to manage it?
How hard is your heart beating at the moment when you have an open trade? That's, I always ask people that. How sweaty are your palms when you're losing money? It's all that sort of, all that soft skills are the things that keep people in business and keep people trading over many, many years. I found out the hard way when I was trading more on a full-time basis because my personality is, unfortunately, I'm a bit of a big head. I like to be right. I'm one of those horrible people that says, I told you so. I told you that was going to go up. When I realised the markets just do what they do, they go up, they go down, they go sideways, and they don't give a monkey's where my stop loss is or where my take profit is or if I'm long or short the dollar. It does what it does. And so once I realised that didn't matter and I could accept losing, it wasn't the losing the money. That does hurt, obviously. It was being wrong because of my personality. And once I realised that didn't matter anymore, honestly, it was like a weight being lifted off my shoulder. It was a real light bulb moment. I'm saying it's a moment. It happened over a period of time. Obviously, it didn't go bing, but that is the big thing, and that's when I've always been a fan of that approach to trading. The strategies, the platforms, the technology, all of that is very much secondary, in my humble opinion, to understanding yourself. And I've got a whole host of trading books, but the one I always say to people, if you had to read one trading book, it would be Trading in the Zone by Mark Douglas.
Trading in the Zone.
Trading in the Zone by Mark Douglas. It's a dry, quite a difficult read. It's easy in the first book he wrote, but it is absolutely fundamental.
I think we should put that in the show notes as well.
Yeah, we will. We'll put a link to that in the show notes.
Trading in the Zone. Actually, I've got it here. You hear it now? Hardback copy. I've got multiple copies. I've given it away at seminars many times. For me, when I first picked it up, there was at the beginning. There's a 30-question simple answer, question and answer session. Let me have a look. I'll just open it here. Attitude survey he calls it. So 6 questions. Number 6. In my mind, there is always a cost associated with finding out what the market may do. Do you agree or disagree? It doesn't sound like much about learning to trade, does it? That sort of question. Losses are an unavoidable component of trading. Do you agree or disagree? Making money as a trader is primarily a function of analysis. Do you agree or disagree? You do that before you read the book, and then the survey, the same 30 questions are at the end of the book. And honestly, you'd be amazed at how your attitude changes from absorbing the book. And, it's always near me. I always have it and show it at seminars, and I thoroughly recommend it. There's some great videos of Mark's unfortunately died recently, but there's some great videos of him out on YouTube as well explaining things. But that's the only thing that moves the market is human emotion, fear and greed, and they're the 2 things we need to master, or try to manage at least.
That's just what I was going to ask you. Is it a teachable concept? A lot of people think, well, either I can do it or I can't, or I've identified that it's a problem, but now I don't know what to do with that. So you've sort of answered that question. Can you manage your own psychology?
Yeah, absolutely, Alison, absolutely. But you've got to be able to take a step back. The trouble is people, I'm too much of a rush. I'll just trade anyway. I say at webinars and seminars, get a mirror out, put a mirror straight in front of your face, because that's who you're competing against. It's not against your broker. It's not against the Bank of England or the Fed or the market going up or going down. You've got to beat yourself, really. You're not beating the market. You can never beat the markets. You've got to understand yourself. And I say, for me personally, having done it and lost money and made money and got over the hump, it's really about that is understanding yourself and moving forward and accepting that you will lose. And most strategy, we talked about strategies and systems before. Most strategies and systems are good enough. They win enough. What do I mean by that? Well, they win more than they lose. So 50%, 60% win rate is good enough. The problem is most people can't accept the 40% they lose. That's what really gets to people.
another side of that is people then missing out on trades, the FOMO.
Absolutely.
I imagine that also causes an issue
Yes.
with your trading psychology.
Absolutely.
But the markets are going to go on forever.
Yeah, they don't. Yes, exactly. They don't get that. I mean, the Trading the Zone was written, I think it was in 2000, so it's 23 years old. Another one of my favorite trading books is The Reminiscences of a Stock Operator by about Jesse Livermore, and that's 100 years old. That book this year,
Wow.
written in 1923.
Wow.
And he's a real person. He did things. I mean, his risk management was terrible at some point, but he learned from a boy how to read the tape and trading legend. But it was all about understanding himself. That was the big thing that made him so successful.
Yeah, it's something we touched on last week. Actually, is that the market's essentially, of course, there's many more things going on. There's lots of bells and whistles, but the price movement, hasn't really changed. It's fear, as you say, fear and greed is what drives it. And people 100 years ago were just as fearful and just as greedy. So yeah, it's amazing that you can read a book 100 years old and
Absolutely. And the other two are, hope and regret. People say, "Oh, I hope it's going to go up," or "I hope it's going to go down." You've got to leave hope at the door from your trading platform. And again, that we touch on the app. That's one of the things have become much easier to trade now. You can press buy or sell very, very quickly, whether it's on your mobile phone or on your tablet or your laptop or your workstation. And it's people have argued it's become a little bit too easy because not a lot of considerations taken before they press that buy and sell. They've got to get in. And as we touched on before, the mem stocks last year was a classic example. A couple of years ago was a classic example of that, wasn't it? And it's very brutal and tragic for many people.
Yeah,
I'm sure.
And that brings us on quite neatly, actually, to something else I want to discuss with you guys. Is cryptocurrency. It's also had a particularly brutal year, and I know it's very hot and it's trending and it's very popular amongst visitors to our site, especially younger people who want to get involved in trading. And it's incredibly volatile, which makes it a magnet for more experienced traders and scalpers. But the risks involved, we find, are much greater than other CFDs, especially for beginners. And I know we talked about this earlier, Andria. Do you guys have any thoughts on the crypto market in terms of for beginner traders or in general?
Well, again, it's volatility, as you touched on there, Chris, does attract people, and I'm a big believer in technology, and it is the future. The blockchain that sits behind cryptocurrencies is very, very clever. Obviously, the established institutions don't necessarily like it. Obviously, there's a lot of negative press. I found one. I think it was a Wall Street Journal note when we said we were going to do this podcast, and I can't remember what I've done with it. It was by Charlie Munger.
Oh yeah,
listeners, if you don't know who Charlie Munger is, go and find out. Okay, that's all I'll say. If you don't know who Charlie Munger is, and it was an article that was in the Wall Street Journal. 1st of February. Why America should ban crypto? He says. It's quite a long. It's not long. It's quite a short article, and there's lots of big names in the financial market saying it's we avoid it, stay away from it. However, as with the internet, when it arrived, people were saying, "Oh, it's evil," and all the rest of it. It is the future. Digital currencies, digital way of doing things, and the blockchain can be very, very powerful. But at the moment, cryptos are seen as a gambling contract. The massive volatility, the huge crash we had last year. But again, if you're a holder of crypto, not necessarily a trader, if you bought it a few years ago, you're still very much in the money. At what's it trading at the moment? 20-odd thousand, isn't it? 27,
something like that. Yeah,
22,000. And there's only a limited. I'm talking about Bitcoin now, and there's obviously there's a limited amount of them, so that's bound to add pressure to simple supply and demand. But from a beginner's, just coming back to your question about beginners' approach, yes, obviously, as with any trading, you need to always manage your risk, and so it can move very, very quickly. And 5, 6, 7, 8, 10% move on cryptocurrency is not unheard of on a daily basis, and that can wipe people out very, very quickly.
Which is why the FCA obviously has now banned crypto as a CFD product.
For
And we've
retail
seen,
traders, I
yes, for
think.
retail traders, and we've seen other regulators sort of following. Well, to a degree, they're starting to become aware that they need to sort of put stricter regulations in place. So, yeah, what do you foresee? I mean, you just said that you think it's going to be the future, but in terms of regulation, how do you think they're going to sort of clamp down?
It is the future. It is a serious player in the world economy. It's here to stay. I totally agree with Stuart. So definitely the regulation is a big issue. Could cause even more volatility into the market if this is a
Yeah.
chain and this is just the beginning of regulators like banning cryptos. But to be honest, I believe that banning cryptos is not any solution, because for having cryptos to say today is because there is this distrust in the traditional financial institutions, right? This is why we end up having a decentralized asset, because you mentioned before the young generation, okay, and I think I am in that target group. I want to believe at least that I am in that age target group. So we have seen financial recessions, we have seen economic difficulties, and that was the outcome of having something or something that the young generation tried to do in order to avoid these regulated, these centralized institutions. Not that I'm saying that this is how it should be. No, there is some
Hmm.
kind of it should be controlled somehow, but I don't believe that the majority of the regulations will actually continue this banning. They will add controls. They will add some limits, because after all, okay, it cannot be just stay as it is, and this is causing a lot of damage into the economy anyway. But I don't believe that it will be banned or stopped or anyway. Just at some point will get control, will stabilize. That's what I believe personally, at least.
Yeah. And I think you're probably right, Andrea. I mean, I think a lot of the issue, especially with the crash this year, is really the people who ran these exchanges that have now collapsed. I think a lot of the people who started riding this wave when it was cresting and made a lot of money, it looks like they've behaved fraudulently, according to the allegations, and it's put a real damper on the whole market. But
Mm.
as you said, Stuart, I mean, there's a finite number of these things, and they're not going away. And it's really important that regulators see that. And I hope you're right that the FCA retail ban on crypto trading, well, crypto CFD trading, I hope that's not copied across the world. And I'm sure you say the same. Like, I mean, just be very careful if you're trading crypto CFDs because of the volatility for the time being.
Absolutely, and we talked about psychology, and obviously what happened with the exchanges, FTX is a classic example, and Luna earlier in the year.
Yeah.
It is that sentiment thing. You can't, once sentiment goes, it's very difficult to get it back. Trust is obviously absolutely fundamental. So, but yes, it's a bit like Canute really with the crypto futures. He couldn't hold back the waves, and really digital currencies, whether they're central bank controlled still, will inevitably come along, in my humble opinion.
Yeah. No, I think you're probably right. I mean, as we were talking earlier, like, I mean, it's been a mad few years for the markets. A lot of that was to do with, looking back before the strength of the dollar last year, and obviously the war in Ukraine, and before that we had the COVID pandemic. Does everybody remember the COVID pandemic? Feels like
It
feels
feels
like a
like an
lifetime
age.
ago.
Yeah.
But that really, I mean, we saw during the pandemic, a lot of people, a lot of younger people, turned to online forex trading and CFD trading. Did you guys see that upturn in your business? And are you still seeing a lot more younger people attending webinars and getting involved in trading?
Yeah, yes. I mean, there's always been young people interested in it, but there's quite a. I was just doing a quick review just this week. Obviously, it's post COVID, but there's quite a distinct split between like the young, sort of that under 24 demographic, and also like the over 55 demographic as well. There's quite a peak in both of those demographics that I find
Oh,
quite
really?
interesting. Yeah, so yeah, obviously the COVID, the lockdown, people in their bedrooms, on their phones, on their laptops, you saw that spike, and that was part of probably those meme stocks as well in the States.
Yeah.
in particular. But certainly from a CFD trading point of view, the attractions of it became more evident as people weren't looking for something else to do. But again, as I touched on when we were talking about trading psychology, once you understand yourself even as a 22-year-old or a 23-year-old, that yes, we change as human beings, but we don't really change, just like the markets don't really change. So once you understand your risk profile at an age, you adapt that as you grow and develop as a trader. And the sooner you start, the better in that sense, because anybody can learn to be a successful trader. Anybody can learn about themselves wherever they are in the world, whether it's South America, South Korea, or South America or South Kensington. Anybody can learn to do this, male or female. And again, one of my big hobby horses is that females physiologically are designed to be better traders than men. But perhaps that's a topic for another broadcast, another day. Chris and Alison.
Controversial. I would love to hear your thoughts on that. But maybe not. Maybe not today.
Not controversial. Straightforward.
As you say, you sort of had this influx of traders who were sitting in their bedrooms. And have they remained? Have you noticed sort of a gradual increase since then?
Yes, there was a huge spike of volume. There's people are now gone back to perhaps their normalising in inverted commas, but certainly there's a higher volume of people trading now and staying around. But as I said at the beginning, it's not necessarily just the younger people either. So, which I say I've only just noticed in the recent a few weeks or so. But yes, so the sooner you start this, the better, because it is a skill you'll have for life.
No, it is good advice, and I agree with you, and especially taken in with all the other advice you've given in this podcast, about understanding yourself and taking the time to educate yourself, and it's all been fantastic advice. And if you start young, as you say, you really set yourself up. Yeah, so that's great advice for younger people. And I was actually going to make a point, Stuart. I know that you said you saw a spike in over 55s as well, and I know a lot of people took early retirement in the pandemic, and I wonder if that had anything to do with it.
Yeah, they tend to have more capital. The reassessing their whole outlook on life. As you say, people work not necessarily not wanting to go back full time, working 5 days a week, 6 days a week, working more on their schedule and their lifestyle. So yeah, there's definitely been what they call it, the quiet resignation across all age groups, not just the over 50s, 55s. Quite fascinating, yes.
Yeah, really interesting. And demographically, but it also seems, as you're talking about, Stuart, maybe just a natural extension of trading psychology, of herd psychology that drives the markets.
Absolutely. I do my risk management webinar at least once a month, and one of the quotes I use right up front is the one from Jesse Livermore saying, "There is nothing like losing all you have in the world for teaching you what not to do." And that's the thing. Lots of people will have been burnt from these meme stocks. A few people will have made a fortune, and they're the ones you still see on social media with their Lamborghinis and their wadges of dollars and their Rolexes, and saying how easy it is sitting by the sea, and this is just easy with me laptop here, and I don't do this anymore. But you've got to be in it to win it, but you've also got to be in it to experience the highs and lows of winning and losing. And it's all about, smoothing that curve out, not getting too high, not getting too low. It's the same coin, winning and losing. It's just how it falls.
Yep, it is. I think that just about wraps it up. I just wanted to touch on, I know that there's a big event happening in Santon and Johannesburg in May. HFM, I understand, are planning to be there. I'm not sure if you guys will be in attendance, but if somebody did want to attend and come see you, do you have any details?
Yes, the event's going to be, I think it's the 8th and 9th of May. I can't remember off the top of my head. Our office will certainly be there. I don't know whether Andrea and I will be there, but we'll definitely be there. And as I say, our Sandon office is literally round the corner from the conference centre. It's a great, it's a great place. There's a nice teaching room. There's a training room. All the guys are there. Offensi's obviously our man there. So do come and see us. We're here. We've been there since 2016, 2017. We opened the office there, and we're still there, and we're growing day by day. So do come and see us, whether it's online classes or you're physically in Johannesburg and Sandon. You get to the office. Do come in and see us. We'd be happy to see you. Happy to help.
Fantastic, guys. Well, thank you so much for coming on.
Well, thank you. And
it's been wonderful.
as I say,
it was a pleasure.
Yeah, may the pips be with you, as they say. All the best, everyone.
And and hopefully have you on again sometime in the future.
Absolutely, I'd love to do it, and I'll explain my theory about female traders.
Yeah,
Yes.
that's part 2.
Bravo. See you soon. Thanks, everyone.
Thank you so much, guys.
Thank you, guys.
Bye-bye.
Thank you.
Bye-bye.
Bye-bye.